What are cryptocurrencies?
They're a type of digital money, but instead of being controlled by a central government, they're decentralized using blockchain technology.
Currently, there are more than 4,000 different cryptocurrencies available. Should you invest in one of these? It depends entirely on who you ask. Invest in cryptocurrencies comes with both advantages and disadvantages, and the answer to this question will be different for everyone. Tesla, MicroStrategy, and Twitter are all large publicly listed companies that have invested in Bitcoin. However, it does not mean that every investor can benefit from this move. If you want to learn more about why you should buy crypto now, just keep on watching. By the way, while you're here, make sure to click that subscribe button to stay up to date with all our engaging videos, and use that trigger finger by smashing that like button. Now, let's get into it. Bitcoin experienced its third halving cycle in May last year, during which the block mining rewards were halved and the price skyrocketed as a result. Although there's a lot of debate regarding the end of the Bitcoin bull run, one thing is certain: both winners and losers will emerge. That said, the opportunity for any cryptocurrency investor to make profitable gains is perhaps the most significant benefit that investing in it can offer. But those gains come at a price, which is the ability to stomach a lot of volatility. While some investors may get scared off by this volatility, Michael Saylor, CEO of MicroStrategy, says that volatility is a good thing. In a recent interview, Saylor said Stansberry Research that he would rather have a volatile 300% return than a non-volatile 15% return. Saylor goes on to say, it's like a Jedi mind trick to convince you that you should be afraid of volatility. If volatility is going to return 200% pre-tax a year for 12 years or for 10 years, and you're afraid of it, you lost 99.5% of your wealth because you're afraid of volatility. Besides volatility, cryptocurrencies also offer investors a means of diversifying their portfolios, which are traditionally held in stocks, commodities, and bonds. What does this mean? Now, institutional investors, high net worth individuals, HNWIs, and retail investors are allocating a small portion of their portfolios to cryptocurrencies. Mike Novogratz, the CEO of Galaxy Digital Assets, spoke recently about the effects of this on the way investors are changing their tune. During an interview with CNN, Novogratz said, I now think it can be a more significant part of people's portfolios. I think a new investor could put 5% into Bitcoin. Bitcoin's not going to back to zero. This idea that it can go to zero is not right anymore. It could certainly trade back to 14,000. They could lose 30 to 40%, but you're not losing 80 to 90% of your money. There's too much infrastructure built there. That said, since the era of inflation instability and rampant money printing by the Federal, gold has been doing as well as late. At the moment, commodities and precious metals should be booming, but they aren't, which has caused some investors to speculate that Bitcoin is taking gold's place. The most immediate explanation for the change, according to Citigroup analyst Akash Doshi, is an expanding investor base and a preference among some institutional players for digital alternative assets. Bitcoin has gained 84% this year, and its total market value recently surpassed $1 trillion. As with every investment, there are a few caveats to consider. Volatility can be both good and bad, because there's a possibility of losing money as well as making gains from it. For this reason, you should never invest more than you can afford to lose. Cryptocurrency trading and investing. You will need to sign up for an exchange if you decide to add cryptocurrencies to your investment portfolio. Exchanges have different features, so it's important to be aware of this. Some open source exchanges, for example, don't require invasive identification documents, and not every exchange offers credit card support, but OKX does. Plus, you should look at the KYC AML requirements, fees, and derivatives trading options, as well as whether the exchange is legally available in your jurisdiction. Investors who are holding over a long-term horizon, 5 to 10 plus years, have a wide range of options for earning passive income on their crypto holdings. If you're using BlockFi or a Celsius network, then it's important that you do your due diligence and understand if you're earning interest on your crypto that there's a risk involved. On the long-term horizon, cryptocurrencies like Bitcoin do exhibit large upside potential in the coming 10 years. In particular, this is true for entrepreneurs starting crypto businesses, such as an exchange or creating new coins. That said, every investment involves some level of risk, and investors need to continuously rebalance their portfolios to avoid overexposure to risk. Given that Bitcoin runs on 4-year cycles, dollar cost averaging is the best way to invest in crypto assets, especially during the bear markets. Cryptocurrency prices have been reaching new heights in recent weeks, and investors trying to get their hands on them. Investing in crypto can be lucrative, especially if you do it at the right time. Imagine that a decade ago you invested $1,000 in Bitcoin. Today, you'd have more than $15 million if you didn't sell during that time period. Even though it's possible to become a millionaire with cryptocurrencies, some investors may not always be able to do so. How likely is it that you become rich with crypto? Understanding risk versus reward. It's easy to get caught up in crypto's phenomenal gains. Over the past year, Bitcoin has surged 372%. The price of its competitor Ethereum has risen more than 1,500% in the same time period, while Dogecoin has surged more than 19,000%. On the basis of those numbers alone, it seems impossible not to get rich with cryptocurrency. However, past performance doesn't necessarily predict future results, and crypto is still a high-risk investment. The price of cryptocurrency may rise, but it may also drop. In fact, Bitcoin's price has fallen more than 26% in the last month, demonstrating the extreme volatility of the cryptocurrency market. The fact that crypto is highly speculative is one of the reasons why it's experiencing so much turmoil. There is no way to predict what the future of cryptocurrency will be. Nobody knows it will be a runaway success or a massive failure. By investing now, you could make a lot of money if it succeeds. However, if it crashes and burns, you could lose everything. Should you invest in cryptocurrency now? The allure of crypto is hard to ignore. This is an exciting new thing that promises to change the world. And if prices continue to rise, you could make a lot of money. Be sure, however, to consider your risk tolerance before you invest. If you are a relatively risk-averse investor, buying crypto may result in many sleepless nights during periods of volatility. Bitcoin regularly drops at least 20% and has lost as much as 80% of its value in the past. Crypto may not be the best choice if you're starting to sweat just thinking about your investments plummeting by 80%. Also, make sure your financial situation is in good shape before even considering investing in crypto. Be sure to invest only money that you can afford to lose, and ensure that you have an emergency fund of at least 3 to 6 months. In this way, you won't have to sell your crypto investments in case of an unplanned expense. Lastly, ensure your portfolio is diversified and strong. If your cryptocurrency investments go sour, you'll need a solid core portfolio that you can fall back on. Investing in cryptocurrency can be lucrative, but it's also one of the riskiest investments. By weighing the rewards and risks of cryptocurrency, you can decide whether it's right for you. Are you finally investing in crypto? Let us know in the comments section below. And hey, if you enjoyed the video, don't forget to like and subscribe to our channel so we can continue giving you the best content. Thanks for watching. See you in the next video.